When insurance companies start tapping out of AI risk, that's your sign the game has changed. We're now seeing major insurers, names like Great American, Chubb, W.R. Berkley, asking regulators for permission to exclude AI related liabilities from corporate insurance policies. Translation: they don't want to be on the hook when your AI system screws up. One underwriter straight up told the Financial Times that these models are too much of a black box. And honestly, from their perspective, that makes sense. Let's unpack what AI related liabilities actually means. Think about all the ways your company might be using AI to approve or deny customers, to prioritize claims, to generate legal-ish or medical-ish advice, to screen resumes, to detect fraud, to automate trading or pricing decisions. Now imagine one of those systems makes a bad call. It wrongly denies a loan or insurance claim. It produces biased outcomes that unfairly target a group. It gives damaging advice that a customer relies on, or it triggers some big operational error or security incident. That's where lawsuits, regulatory investigations, and reputational damage come in. In the old world, companies kind of assumed, well, worst case, our liability or errors and omissions insurance will help cover this. But if insurers start carving out explicit AI exclusions, you can't make that assumption anymore. You might be carrying that risk entirely on your own. From the insurer's side, here's the problem: AI models are opaque. They're complex, probabilistic systems trained on giant data sets nobody fully understands. Even the builders can't always explain why a model made a specific decision. If you're an underwriter, how do you price that? How do you estimate frequency and severity of losses when the core decision engine is literally described as a black box? So instead of trying to price the unpriceable, some insurers are saying, we'd rather exclude it. What does that mean for you if you're building or deploying AI? It means we use AI is no longer just a product feature. It's a risk decision. You need to stop assuming if it goes wrong, insurance has my back, and start asking very specific questions. What exactly does our current policy cover when AI is involved? Are there AI or algorithm exclusions buried in the wording? If our model causes harm, who is actually on the hook? Us, our vendors, or no one but us? You also need internal guardrails, clear documentation of how your models are used, human oversight on high-stakes decisions, testing for bias and failure modes, and contracts that spell out who carries which piece of the risk. Because if the people whose entire business is pricing risk and paying claims are looking at AI and saying, no thanks, too black box for us, that is not the moment for you to be casual about it.